Investing your first $10,000 can be an exciting opportunity to start building your wealth. Before investing, it's important to make sure that you have enough savings to cover your emergency fund and other short-term financial needs. It's also important to have a good understanding of your current financial situation and your overall financial goals. When considering $10,000 as an investment amount, several factors come into play. While it can be a good investment, the outcome depends on your financial goals, risk tolerance, and investment strategy. Is investing right for me? Some things to consider before you invest. Having an emergency fund is highly recommended. It's suggested that you put away 3 to 6 months of essential expenses into an accessible savings account so you can access it if necessary. If you're considering a big life transition like having a baby or relocating, it's a good idea to have some funds in reserve. Making sure you have an emergency fund available can offer financial security and peace of mind. If you're carrying a large amount of debt, such as credit card debt, it's probably a better idea to pay that off first rather than investing that money. Consider switching to the best 0% balance transfer credit card in order to save on interest and make progress towards eliminating your debt. Establish risk tolerance. Assess your risk tolerance to determine the level of risk you're comfortable with. Investments carry inherent risks, and understanding your risk tolerance will help you choose suitable investment options. Generally, riskier investments offer the potential for higher returns, but they also come with increased volatility. Is $10,000 a good investment amount? Investing $10,000 can be a solid starting point for building your investment portfolio. While the amount itself may not seem substantial compared to larger sums, it still offers opportunities for growth and wealth accumulation. However, it's important to keep in mind that the longer you can keep your money invested, the more potential it has to grow and weather any stock market fluctuations. What is the best way to invest money? Number 6. Mutual funds or ETFs. Investing in mutual funds or ETFs allows you to gain exposure to a wide range of stocks, bonds, and other assets with a single investment. These types of funds are managed by professional portfolio managers who select the underlying securities and make adjustments to the portfolio as market conditions change. ETFs and mutual funds are both traded on stock exchanges and can be bought and sold like individual stock. One of the main benefits of investing in these types of funds is that they provide instant diversification, which can help to reduce risk. They are also relatively low cost and easy to buy and sell. Number 5. Dollar cost averaging. Instead of investing the entire $10,000 at once, you could consider dollar cost averaging. This strategy involves investing a fixed amount regularly over time, regardless of market conditions. It helps mitigate the risk of investing a lump sum during a market downturn and allows you to benefit from potential market fluctuations. Number 4. High-yield savings accounts. They are FDIC insured, meaning your money is safe up to a certain limit. They typically offer higher interest rates than traditional savings accounts, and some of them don't require a minimum balance. While the returns on high-yield savings accounts are typically lower than other types of investments, they're considered to be very low risk and can be a good option for investors who are just starting out or who want to keep a portion of their money in a liquid, easily accessible account. Number 3. Research and analyze investments. Conduct thorough research on the investments you're considering. Understand the company or asset, its historical performance, future prospects, and any associated risks. Use reliable sources of information such as financial news outlets, company reports, and reputable investment websites to make informed decisions. Number 2. Stay updated on market trends. Keep yourself informed about market trends, economic indicators, and news that may impact your investments. However, avoid making impulsive investment decisions based solely on short-term market fluctuations. Focus on your long-term investment strategy and the fundamentals of your chosen investments. Number 1. Real estate. Investing in real estate with $10,000 can be challenging, as the cost of buying a property outright can be high. However, there are several options available to those with limited funds. One option is to invest in real estate crowdfunding platforms, which allow individuals to invest small amounts of money in real estate projects. Another option is to invest in a real estate investment trust, REIT, which is a company that owns and manages a portfolio of properties and is traded on the stock market. REITs can be a good way to gain exposure to the real estate market with a smaller investment. Additionally, you could consider becoming a silent partner with an experienced real estate investor who would be responsible for finding and managing the property, while you provide the funds. This allows you to invest in real estate without the day-to-day responsibilities of being a landlord. It is important to do thorough research and due diligence before making any investment, as there are also risks involved such as market fluctuations and property maintenance costs. Overall, $10,000 can be a good investment amount, especially if you have a clear understanding of your financial goals, risk tolerance, and investment strategy. Remember that investing involves some level of risk, and it's important to do thorough research. Diversify your portfolio and consider your time horizon to maximize the potential for growth.